please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's the 26th edition of the Nasscom India Leadership Forum, and in a break from tradition, Nasscom has held it along with the World Congress on Information Technology in Hyderabad. Hello and welcome. I'm Kritika Saxena. With me is my colleague Nitya Balakrishna. Nitya, what did they want today?
Absolutely. It began with quite the bang. Prime Minister Narendra Modi himself addressing all the 2,500 delegates from New Delhi, and then the Information Technology Minister Ravi Shankar Prasad actually speaking at that keynote session. But let's first look at the exclusive conversations with CNBC TV18. Here's Rishad Premji, the Vice Chairman of Nasscom and Chief Strategy Officer of Wipro, as well as Tech Mahindra CP Gurnani.
There are signs that overall global economy is only looking better in practically all parts of the world, and which effectively means is that we can see more digital spending. We can start looking at better consumption, not only on digital technologies but also on the changes that many organizations have been planning.
CP, you have said that you want to double your digital revenues based on the kind of momentum and the traction that you're seeing from clients. You're at 24% right now. By when would you be able to double this? Is 2020, 2021 a realistic target?
So there's a good word in English which said tomorrow, and then tomorrow never comes. So I'm just kidding. But I mean, ultimately, what we are talking about is, internally, our plan is to take the digital revenue up to 60% of our business.
So that's more than doubling from the current
in 3 years.
Trouble areas that seem to be there, be it US, be it the fact that BFSI continues to remain volatile, even though you have been able to outperform your peers in a couple of quarters in the last 1 year. Do you see US and BFSI seeing a recovery in FY19?
Again, BFSI, when you start, I mean, every sector, and in Tech Mahindra, we classified and studied 17 sectors in huge detail. And we looked at the influence of existing companies, looked at the influence of new age companies. We looked at the convergence of a company like a WhatsApp coming into mobile wallet, or Amazon getting into manufacturing.
I want to ask you about this. What do you think would the impact of WhatsApp Pay, Amazon branching out into various areas? Will this disrupt the Indian IT services sector as is?
I think Indian IT will benefit out of all of this.
All of it.
That's why I said the classification has to be three. Okay. The new age companies, the companies which are into convergence, or the third thing is which are traditional players. And all three of them, I mean, ultimately need technology to be able to be the challengers, be the innovators, or be the disruptors. Okay. And as long as we understand what their requirements are, I think we will do well.
So this is terrific. I mean, this is the first time we're doing it along with WCIT and WITSA in Hyderabad. It usually happens in Mumbai, and we have over 2,500 people, almost 2,500 people attending. So it's been a terrific show, and you've seen the morning kickoff, which has been great. And looking forward to the discussions. I think it's very focused on the new world, on digital, on new skills, on new technologies, and how we as a country can leverage that and grow with that in its next phase of growth for the technology industry in India.
Well, Rishad, if I can ask you, this year was slightly muted as far as, export growth was concerned, and even IT spending, we've seen FY18 be a little bit of a, struggle. But FY19, even the Gartner report indicates it's going to pick up. What is the outlook as far as the IT sector is concerned in coming years?
So you'll have to wait for that. We have a meeting tomorrow afternoon with the press, so you'll have a better sense for what next year should look like. But this year look is very much in line with what we had guided last year. We had guided 7 to 8%, and so it should be broadly in line along those lines. And the economy in the world are picking up. I mean, you've never seen the world more positive now at this point in time than it ever has been. You look at the US, you look at Europe, you look at even Japan.
Sure.
And so I'm quite optimistic about what that bodes in terms of spend on technology as we move into next year. So hopefully we can have a good conversation tomorrow as well.
One final question. We're seeing AI, automation, blockchain technology. Those are the buzzwords. As far as you are concerned, what are the key, themes that will be the focus points of this year's conference?
I think it's all about new technologies, right? And I think it's really about how those come together and confluence to create impact. With so much change in the world, with the fact that the world has truly become a mobile-first, a cloud-first world, it's become so much more data-rich that it's getting more and more organized in terms of data. I think that creates huge opportunities for how organizations now go to market, how they address both their customers as well as their employees. So I think it's a confluence of these technologies that will have an impact.
So IT companies putting on a brave face, but FY18 there was tough for IT, but not for BPM.
Absolutely. In fact, that's exactly what Keshav Murugesh of WNS and Rohit Kapoor of EXL Services had to say in their conversation, indicating that FY19 will definitely be a better year for the outsourcing industry.
I think there are a lot of steps that have been taken by the industry groups and individual companies itself in terms of just focusing on, the basis of this conference, disrupting the core, making sure that clients and prospects are seeing the huge impact that our business has to offer to them, whether it is IT or business process or engineering services or whatever. And I think in every sector there are green shoots being seen in terms of pipelines, in terms of customer visits, in terms of guidance is starting to look better. You will probably see somewhere soon a new guidance coming out from Nasscom.
Is the worst behind the Indian IT BPM sector?
I think so. I think firmly behind us.
And FY19 looks like, at least from the initial green shoots that you're seeing, FY19 should be a better year than FY18 and FY17?
I would expect that, forward looking from here, 19 and beyond, the revenue growth as well as the whole overall impact that we are creating for customers will be far positive.
7 to 8% is the guidance that Nasscom has given. Are you confident to be able to cross that?
Yes. So if you look at how the traditional BPM companies have been growing, I mean, including WNS, you will see that our growth rates for the pure plays appear to be higher than the traditional growth rates that Nasscom has given out for industry as a whole. And I think it comes on the back of some of the steps that we took over the past 2 or 3 years. So if you look at how we rebranded the industry to enable clients to appreciate what is the kind of impact we are creating for them around the whole skilling kind of area where we have tied up with individual universities. Individual companies like WNS have even created their own courses. Like, we have created an MBA in business analytics program. So if you just look at it, WNS, for example, is in line to deliver in excess of 20% growth, for fiscal 18, right? And
so you're significantly beating that 7 to 8%.
Yes, some of it is coming from 3 acquisitions we did during the year, but on an overall basis, the constant currency organic growth also is much higher than the Nasscom growth rate.
So for the BPM industry, I think FY18 was a good year. And I think for FY19, we continue to see good demand potential out there. The reason for that is the US economy is doing really well. There's just been the introduction of the Trump Tax Act, which allows for a lot of money being repatriated back to the country, and therefore there are going to be a number of spending programs where these funds will be used. So I think actually the market environment is quite nice.
At EXL Services, what do you think will be the key focus areas for yourself in the next couple of quarters as far as, investment and development and expansion is concerned?
So for EXL, insurance is a big play. It's almost 50% of our business.
Yes.
And that industry vertical is performing exceptionally well for us. Another vertical which is key for us is healthcare. And in the US, the healthcare is a huge industry, a lot of transformation taking place out there. And the use of digital technologies in healthcare can make an enormous difference. So for us, these two verticals are going to be strong plays for us.
Well, the budget, interestingly, Rohit, did throw a lot of impetus in India on healthcare, a universal healthcare scheme, adoption of something similar, as well as insurance for the same. So do you think India will also be a very important market for you in the coming year?
Yeah, absolutely. I mean, this morning we heard the Prime Minister talk about it, and he was talking about inclusion as we move forward on the digital transformation agenda. And I think making a difference in people's lives in India can be a hugely important area, and that can be a focus area going forward.
Well, on that note, it's time to slip into a quick breather right here on the special show. But Kritika, what do we have lined up for them on the other side?
These are the biggest global voices that we have here. Shantanu Narayan from Adobe, as well as Paul Ahmalan from Capgemini. Stay tuned.
Welcome back to this special show from the Nasscom Leadership Forum here in Hyderabad. Before the break, we brought you the biggest voices of the Indian IT and BPO space, but now it's time to throw the spotlight onto the global giants.
Well, let's hear from Shantanu Narayan of Adobe to Paul Ahmalan of Capgemini, as well as David Coote of Honeywell, all betting big on India. Listen in.
We actually did announce that as a result of the reduced corporate tax that our earnings would grow quite substantially in 2018 and then continue to have a lower tax rate. I think will just continue to improve American competitiveness. The other thing we also announced was that we would be bringing back the money that we had offshore, and that would again allow us to invest in innovation and continued growth for Adobe. The company, Shireen, is focused primarily on long-term growth, and access to capital was something that Adobe had even prior to this repatriation. We've had a long history of stock buybacks as a way of continuing to return excess capital to shareholders, and I think investing in technologies like AI and mobile that we think will continue to drive future growth is also top of mind in terms of our agenda. Well, first, I think we're in rarefied atmosphere in that when you look at a company like Adobe and what we are seeing on top line growth, what we are seeing with respect to bottom line growth at a very substantial margin, I think we're a very unique position. I think in terms of potential concerns that might exist, we look at the two key imperatives for the company, namely empowering people to create and helping businesses transform, and think that they represent tailwinds for many years, because that innate desire for whether you're an individual user or whether you're an enterprise to tell your story digitally, and the need for companies to determine whether digital is going to be a tailwind or headwind, we don't think is impacted by the economy. So we'll continue to monitor the economy, but we think that both of the businesses that we have are so fundamental to how individuals and businesses transform that as long as we continue to innovate, we'll see good growth. We would love to find technology companies that are innovating. I think as the evolution of the industry in India continues, services is still where there's a tremendous opportunity in terms of talent, but the product innovation in a fundamental way in the areas that are critical for us, namely digital media and digital marketing, there are none, unfortunately, that are on my radar. With respect to the entrepreneurship that we're seeing, I think the entrepreneurship in India is not in the areas that are critical to Adobe's growth, namely analytics, what we're doing with AI, what we're doing around augmented reality and virtual reality. To your question, though, in the US, sometimes valuations have got ahead of themselves. But if it's the right technology and the right people, we will still continue to be aggressive about looking at it. We bought some really interesting companies last year that are going to be the basis of some new products that we deliver this year. And so we're constantly looking, but even the organic opportunity at Adobe is so large right now. As long as we continue to deliver against that innovation, we feel very confident about where Adobe is headed.
I have with me one of the biggest global faces at this event, Paul Achmalan from Capgemini. Paul, it's a pleasure to talk to you. You're always bullish on the country, but what's the sense that you get over here? There is the sense that, you know, things are looking better, that India has become a destination, one of the first priorities for global IT companies. So from Capgemini's perspective, how are you looking at India differently now than you were earlier?
So the first point is now Capgemini has more than 100,000 people here, about 50% of our total headcount. The coming challenge, and it's very exciting, is about making India the hub for innovation. Because historically we have seen here in India extreme excellence in terms of, I would say, mass production, large delivery, large projects with a large number of people. And when we think digital, we now work for the business. And what is really characterizing the business wants something extremely quick, in a matter of weeks or months, but they are ready to improve it a year later or 6 months later, and it's an iterative model of development. And we need to involve the incredible reservoir of talent that India has produced for that digital revolution, and we are starting to see enormous traction on that.
Based on you know, the fact that you are looking at expanding more in engineering, in emerging technology, there are a lot of startups that have been showcased here at the Nasscom India Leadership Forum. Are there any interesting companies that you can look at right now? You've spoken to me last about how you're looking at niche companies, startups. Are there any interesting companies that are on the anvil? Can we expect an announcement soon?
I would surprise you with a different approach. My view is we should not limit what we bring to the clients to the startups we would have acquired. Clients expect us to come with an ecosystem of intelligence solutions, so we should be a gate for startups to our client base. In that respect, we have opened on the globe 11 innovation exchange where we welcome local startups, be it in India, in Mumbai. The AIE is in Mumbai, another one is in Paris, of course, or in Palo Alto, no, actually downtown San Francisco. So our duty as a large provider that is well engaged with the biggest company of the world, we want to be a gate to our client of the best innovation.
Last question, Paul. As far as the deal pipeline from clients is concerned, we spoke about it in depth last time, but you should have a clearer idea now that the year is ending. Will FY19 be a better year for the IT sector than FY18?
The first point is we released our figures last week. We have seen a clear acceleration in the fourth quarter of 17, which helped us to issue a guidance that was seen as quite optimistic. And this morning I saw a big bank upgrading us from hold to buy. So today we are a recommended stock because people think we're going to grow this year, and the market will support that ambition. And
FY19 will be better from an outlook deal pipeline perspective than FY18 for the IT sector as a whole?
If everybody follows us, I think it should.
Okay. Thank you so much, Paul. Always a pleasure to talk to you. Thank you.
Dave, thanks very much for joining us on CNBC TV18. It's always good to have you on the program. Before I talk to you about technology and disruptions, let me ask you about the big tax cut announced by President Trump in America and what the impact is likely to be on corporate America and also US companies operating in emerging markets like India. Do you foresee significant restructuring of operations? What is the impact of the tax cuts on business?
Oh, I think the tax cut overall is going to be beneficial, not just for business, but for all the people that are employed by businesses. So I think it's actually going to be a good phenomenon. I don't think it really has an impact on international trade in any way or movement of factories one way or the other. This is just a case of putting more money in the pockets of companies for them to be able to invest. And if they invest more, then employees will do better. And I would say it's pretty much as straightforward as that. I do worry about the long-term effect of it in terms of the impact it has on our overall debt. Our annual deficits are going to increase. Our debt, which is already high, is going to get higher. It could accelerate a potential debt crisis. but at least in the short term, it should be a boost. It should be a boost to the U.S. economy, which should be helpful to the world.
In the short term, you expect the U.S. economy to benefit from the tax cuts, Dave. How confident do you feel of the growth momentum that we're currently seeing in the U.S. being able to sustain itself?
Oh, I think economic growth in the U.S. should be in that, my guess, 2.5% range for, could go on for another 4 or 5 years. This year might be a little higher because of the tax cut impact, but over time, it's tough to see right now, other than some big geopolitical event, what could possibly bring it down.
He's been bullish on India and the India story. As you look at where things are today in India, you know, what's your own sense of the strength of the growth momentum and your own, Honeywell's own sort of story here in India?
Well, our Honeywell story, as you know, is quite good. We've gone from about 500 people 15 years ago to over 13,000 today. And the economy is finally starting to really move again, and we're going to be able to benefit from that also. My big hope for the country is if you go back to the 1990s when Manmohan Singh was finance minister, he was able to get through a number of changes that allowed the country to grow faster for a good period of time, and the country benefited. But the country let up, government let up, and nobody really pushed more change. It was like that was enough. So then we ended up in this kind of stultifying period where nothing was really happening, the bureaucracy was taking over, and the economy wasn't growing. Well, PM Modi, who I hope you appreciate that I'm channeling with my beard, I'm a big fan of PM Modi, he instituted a number of changes again, which are again causing the economy to grow. But if people and the government start to feel like they're done, they've done enough because the economy is growing, well, the same darn thing is going to happen again. It will just level off. The change has to still keep coming, and there's a significant amount of change that still needs to occur in the country. The bureaucracy is just stifling, absolutely stifling. Retail needs to be expanded and made more competitive. Protectionism needs to disappear. Education and broadband, like we just talked about. All these things still need to happen, and I'm hopeful that people will support PM Modi's government and make these changes continue to happen over the next 10, 15, 20 years so that economic progress continues. So I'm a big fan in the possibility of what can happen in India, but those government changes need to keep happening.
Well, the who's who of the Indian and global IT sector right here on CNBC TV18. But with that, it's a wrap from Nitya and me.
Well, keep it with the channel because all the news and headlines from day 2 exclusively only on CNBC TV18. Thanks for watching.